Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, unexpectedly, the Australian dollar rallies back to the 72-cent handle on Friday after rebounding from the lows of 71, with the gains driven by broad US dollar weakness following possible intervention from the Bank of Japan, which saw the dollar yen plummet 400 points and pushing the DXY down 100 points. Meanwhile, expectations for an RBA rate hike continue to build, as many economists now expect next week's move of 25 basis points from 3.85 to 4.1%. This could reinforce the hawkish outlook after the inflation accelerated to 4.1% year on year in the Q1 from 3.6. Despite solid US data, including the 2% Q1 growth versus 2.3 expected, and also the core PCE going to a high around 3.2% year on year, and the jobless claims come in at 189,000 against 213,000 estimate. The greenback still remains pressured. This has allowed the Aussie to hold up, but still towards that top side of the range, anywhere from 72 to around 72.60. Still a little bit nervous, and there is divergence here on the RSI and the MACD. So it does give me some speculation that we may not see this move hold, and therefore look back towards 71.65 to around 71.30 and reassess. Although we've got an engulfing candle, no confirmation for that for the euro as it rebounds back into the 117 area. Nevertheless, the market is still holding to a somewhat bullish bias after the RSI broke through the midway point, as we now wait for the ECB officials after the policy meeting and see what happens from there. As I mentioned, there was and maybe intervention from the Bank of Japan, but it's only speculation. But given the fact from this candle and the whipsaw price action, it does make you wonder. Still, the market has reached its downside target after a bull trap was placed technically from the 160 area, and now 156 being reached or exceeded as the low was 155.48. The market is now neutral for me, and I like to see how it plays, as all these gains going back to the beginning of March have been wiped out. And no doubt the market is a little bit somewhat puzzled after this move, and the longs taken out and maybe even caught long, as I mentioned, with the bull trap. So neutral for now. Turning to sterling, the market has rebounded, but still technically the market is not overly bullish. So I'm a bit concerned to the fact that this rally above 136 could be a false move. Keep an eye on it tonight and see how it plays out. Still keeping a neutral view when it comes to gold, but I still feel there is 4,500 on the base as a potential challenge, given the fact the technicals are still negative. And oil, well, the market gave its gains away, dropped back to 102 now, and still questions whether the market can sustain above the 100 mark. But I'm neutral, but given the technicals are buckling, let's see how it plays. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.